if you look back, say from the 1990s, which were the biggest wealth creators in the 90s? Of course, the software guys. So all the Infosys, Wipros, all of them, Mr. Murthy, Nandan, Azim Premji, all were in that age group. HDFC, Deepak Parekh, that age group. Then you turn from 2000 to 2010. Who comes into the right age bracket? Mukesh Ambani, Ajay Piramal, Vivek Chand Sehgal. Enormous wealth creation happened in that period. Anil Agarwal, all of them come in that. You go 2010 to 2020. Actually, Chandra was not yet 50. Look what he did with TCS, which came at the fag end of really a whole IT cycle in a way. And just completely surprised everyone. Rajiv Bajaj, Sanjeev Bajaj, the story of last decade was, of course, Bajaj Finance, so on. So many names like that. This decade, when you look out again, you like last decade, we also thought Jay Shroff and others like that would create something fantastic, which they did. This decade, there are names already, some of them have done.
That is Manish Chokhani. Manish is one of India's sharpest investing minds. On this episode of the Krish Kothari Show, Manish and I discuss the importance of recent events, ideas on long-term investing, and what he would do if given the mandate to grow India's economy. We hope you enjoy the conversation. Thanks for watching. As always, nothing in this video is investment advice, nor a recommendation to or not to buy, sell, or hold any security. We're happy to partner with the Zero On Media Network to bring you useful and interesting insights and information from the world of business and investing. So go ahead and like, subscribe, and hit the bell icon. We often get suggestions for questions from viewers, and we thought that this would be a great chance for you to ask our guests a question. So in the comments, please post any questions that you have for Manish, and we'll pick one and ask him for his answer to that question. Thanks for watching. Manish, welcome to the Krish Kothari Show. Thank you so much for coming on.
Thanks for having me, Krish.
They say that history doesn't repeat itself, it rhymes.
Right.
What is the current situation sounding like?
Great question to kick off. So you're right. I'm also a student of history, especially in terms of economic history. And it does look like the beginning of the end of what was the kind of US empire, which has kind of ruled the world for the last 75 years after World War II. And this gradual decline of the West, it looks inevitable. The gradual rise of China also, in a sense, looks inevitable, and which is why they usually get punctuated by some sort of a war. And maybe Trump has already signaled that. He's openly advocating that we don't want the world order to change. And the Chinese, Russians, Saudis are clearly kind of aligned in saying we cannot have this sort of world order continue forever. So, interesting times.
They say you want to live in interesting times, but
sure.
Now that we're in it, I'm not sure.
But not so interesting.
Yeah,
true.
exactly.
Sure.
Things have gotten a little too interesting.
Right.
But so we're going to talk about the larger context and all of that. But I want to start initially with some conversation on investing itself and how you think about investing, long-term investing. There's this idea that's become really popular in many ways because of Buffett, which is this idea of a circle of competence.
Sure.
I want to understand from you whether you subscribe to that.
Right.
And how does someone think about circle of competence? Is it something that you lean into your natural, inclinations, or is it something you have to consciously develop over time?
It's a bit of both, isn't it? Like when you start, for example, when you go as a student to university, you have a natural inclination, whether you go for the sciences, engineering, or you go for, finance, accounting and stuff like that, or you go for what we call the more right-brained stuff, which is, history, economics, psychology, and so on. So you do have natural affinities to some things. Same way, there are certain businesses that you tend to then, as you become an investor, just have a natural affinity to understanding and liking. And usually people will start with brands and stuff. Unless you're a really hardcore engineer, then you'll be in tech and industrials and so on. But then as time goes by, you realize what you understand and what works for you and doesn't work for you, because there's also in investing a big factor of luck. You'll find, for example, people do very well in property and the same person doesn't do well in stocks, and vice versa. So it also then plays out over time. Like, for example, I have a phobia. Each time I buy a particular metal stock, it never does well. The company's done well, but every time I bought it, I've lost money or I've not made money. And then over time, I just say, this is not for me. I understand the math, I understand the economics, everything, but it doesn't work for me. So there is of course, A, affinity, B, a certain level of knowledge which you build and it compounds over time. And third is also your own history with a certain sector or a certain stock.
You know all those financial services ads where at the end they quickly mumble, investing is subject to market risks, please read the offer document carefully before investing? At my first job, it was actually my role to read the fine print on all those documents. What I learned from that experience was that when it comes to financial products, the reality of what you're buying may be very different from what you're being sold. In recent times, I've had the same experience with insurance, where when you go to make a claim, you suddenly find out that it's been rejected on some technicality. The point is, it's absolutely essential to be very clear about what you're getting when you buy insurance. And that's why we're partnering with Ditto Insurance to simplify your insurance experience. Unless you enjoy reading hundreds of pages of fine print, you're better off consulting experts who deal with insurance day in and day out, like the experts at Ditto. Use the link in the description to schedule a free consultation to get expert guidance to help you with your insurance needs. Ditto helps you purchase the best insurance plan for you by simplifying your experience both before and after buying insurance. Talking to the experts is a great way to have all your questions answered and understand the important details relating to different insurance options, including things like what exactly a particular insurance plan covers. You can even discuss your existing plans to understand your coverage and other details. Their experts assist you not only in choosing the right insurance plan, but also with documentation and claim settlements. And the good news is, they do all this with a zero spam policy. Shout out to the folks at Ditto Insurance. If you're looking for a spam-free platform to buy insurance, schedule a free call or chat with Ditto using the link in the description.
Because you've sort of done this for so long and seen different cycles and so many other things, I want to understand from you how you see the world going ahead in the context that there's so many developments which could in some ways make us a quasi or entirely sort of endless infinity resource world. Think of AI, renewable energy, all of that. How do you think about investing in that kind of world? What are the things that you are looking for and looking at to understand it better?
Fantastic question. And that, I think, 2-3 central dilemmas of investing today is you've come from Wharton, so you know the concept of terminal value and how long can you discount for. And normally equities trade largely on terminal values. You'll rarely get something which is on 2, 3, 4 year payback. In terms of terminal value, when you see technological disruption coming, you would tend to say the valuations of current stocks should be far lower because you can't discount for very long. You also see the economic disruption taking place in the context of this end of a big economic super cycle of 75 years ending. And there's a disruptive sort of war type situation emerging. All this would point you to the fact that terminal value should not be very high. And I should get a little more defensive. But juxtapose that with the way this game is being played, the end game, like in the baseball analogy, you're kind of towards the end innings, where to stay alive, the West is printing money like there's no tomorrow. And that excess money then goes and finds a home somewhere. And because it's become such a mass phenomena and retail investors really have started dominating the market, algorithms have started dominating the market, and they are basically patterns of past history. They're not yet so trained to do predictive analysis. So because 60-70% of market flows are now run by backward-looking algos, in my view, and retail investors who, for lack of better thing, are investing as an article of faith, not really as professional business people. So it's become a bit like, I also use the analogy in my classes at Frame that it's like the art market now. If you like an artist, there's no way you can put a math around how much a painting should sell for. If I like Tesla, I want to buy quarter shares of Tesla now available, or I can buy an ETF and levered. And if enough people start believing in it, it becomes almost like a new religion. So investing today in most of the what I call Anglo-Saxon world has become an article of faith rather than of math. And therefore you'll find the market confounding you at the best of times, because it's no longer like we used to call it in the short run, it's a voting machine, and in the long run, it's a weighing scale. The weighing scale clearly is kind of out of the picture right now. It's running on momentum. It's running a lot on, current flows. And I hope it doesn't end badly, because whenever something becomes so popular, like we had US house prices can never go down, for example. And that's when everything kind of blew up. So we're running into that US can never, falter. There will always be the largest economy in the world. Equities will always do well. You should have that back of your mind that, hey guys, there is technological disruption coming. There is geopolitical disruption coming. And there's also most unknown, thing we don't pay attention to is like there's climate change coming, and it's getting more and more strident. So there are discontinuities which are coming, which, because we've got so trained in the last 20 years that every dip in the market is to be bought, it's become like a herd mentality. We go and buy every dip. But I do think it's towards the end innings of this global super cycle, which started really post 1990, when kind of the Soviet Union broke apart, and it was a one-way ride for capitalism and US exceptionalism. I think it's the end stages of that. So I'm personally not in favor of paying a lot now for looking at stocks 10 years out. Tend to think of, can this company be a value stock at some point in the next foreseeable 5 years? Otherwise, while I'm very excited with the new technologies, I read a lot about them, invest in some of them, but I buy them very kind of early and then only start loading up as the winners become more clear over there. That's really the best one can say now. But it's right what you're saying. We're living in one of the most exciting technological ages. And the singularity which seems to be approaching in the next 10 years is going to change everything we know. And most companies, as we know it, especially in India, may not be functioning in the form in which we see them today.
There's this idea that this sort of endless printing over the last decade or maybe longer has kept a lot of companies artificially alive.
Right.
Do you think that instead of, it may not be the money printing or lack thereof, but eventually technology that is going to find out a lot of these companies? And do you think that a lot of companies are actually dead? We just don't know it yet?
Yeah, that's true. I mean, it's across the world. Like, I mean, we use this famous saying of Larry Summers, right? That Europe is a museum. That most companies there, and I mean, if you're in the market and you're looking at deals, there's pretty much a European company available pretty much every week on sale, because they're just not competitive anymore. A lot of the Japanese market for 40 years, the markets were nowhere. They're only now coming back because we're saying, okay, the governance is better, they're paying back, or they have learned the art of buying back share and thereby giving you earnings per share growth. But these are all ex-growth economies, and most of the developed world is looking at its best years in the rearview mirror. The reason to be excited about India is we still have our good years coming. And the 28, 29 average age of the Indian who's still going to go and play on the world stage over the next 15, 20 years is reason to be optimistic about us. But for certainly the developed world, with the cost base they've created, with the lifestyles they've created, we're involved in some companies abroad. You see, the work-life balance is so predominant that they probably are working 30, 35 hours a week and almost feeling like they're doing a service going into the company. And this work-from-home concept, when the Chinese are at probably 90 hours a week and beating them hands down on most emerging technologies. So this change is coming. Most companies are indeed dead. You even look at some of the companies in the West, which erstwhile we would go and say, oh, these are lovely brands, we should buy them. And then you go and see what they've done to SG&A. In these companies, you go and see how they keep distributing stock-based comp for I don't know what. And they had all loaded up to the hilt in the days of low interest rates. And now with small declines in top line, the profits are falling precipitously. So this Magnificent Seven growth is actually disguising a lot of the rot which actually exists in the developed world. So it's true what you say.
It reminds me of that joke that Europeans get a job just so they can go on strike, what you're saying.
And summer's approaching.
Yeah, exactly. But it's, I want to just double click on that for a second, because there's this idea that a lot of people have that actually the best contra bet right now is European companies.
Sure.
For example, European defense companies or something like that in this tariff world and all of that.
Sure.
Do you think that may be short-lived, or do you think that actually has legs?
Well, it's a bit cute when you buy defense stocks is because you're expecting a big outbreak of war, in which case the stock market is not worth a lot. But you're right that in the short run, when there is money printing going on, that money has to find a home somewhere. If US is already 70-75% of global market cap, that money is anyway wanting to move somewhere, because everyone knows back of the mind, a 25-30% GDP share of the world cannot trade at 75% market cap share of the world. So, I mean, although GDP and market cap should not be so directly correlated, it's really about profits. But I think you get the point that it's a bit overdone. So Europe and even Japan are being traded like a value pop, which is overdue. And you know also the thesis, if you know at an eye note, imagine you know what's going on in the world. Everyone knows Trump has said, Europe, you haven't spent enough on defense. You need to up your defense spending. So yes, there is a boom in defense stocks. Are they pricing it in? Probably. What happened to the energy infrastructure when Russia invaded Ukraine is there in front of everyone. So they have to build their whole energy infrastructure. If you've traveled around both Europe and US and you see the last infrastructure build they did was probably 40, 50 years ago. The places you go and visit look exactly the same, except a little more jaded. And your hotel prices have gone up. That's all that's really, happened in most of these places. So yes, there is a capex boom which has to occur in Europe. And therefore you would want to trade some of these old industrials. But then when you trade them, you say, then what? Because most of these, they have finite values. Because once you've captured that value for the next 4 or 5 years, then what? Which is why the world had moved to platform plays, right? Historically, the Buffett trade was you buy platform plays, which he called brands, which then give you more and more and more. And in our age, we call them the technology kind of network effect marketplaces, for lack of a better word, which then gave you infinite growth on small amounts of capital employed. So we are playing a value trade, like I said. Japan is a value trade. Europe is a value trade. So play the cycle, but I think don't hold your breath and don't be paying for 2035. You can play for 2027 or 2027-8, but that's about it.
Buffett has always said never bet against America, but do you think time has come to maybe at least partially bet against?
Well, Buffett's holding $350 billion of cash, so I think that says it.
Do as I do, not as I say.
Yeah, so clearly there's lack of compelling opportunities, and there's no shame or there's no harm in sitting on cash. There are periods when you should be sitting on cash. And indeed, if US treasuries are yielding, 4.5 or north of that right now, and Buffett's probably the largest holder of treasuries, it's telling you something.
Yeah, very true. So Manish, we spoke beforehand and I told you what I really want to focus on is this idea that imagine tomorrow morning you get a phone call and it's the Prime Minister and he's saying, we just need to get firing on all engines. I want to appoint you India's economic czar.
Are you my friend or what do you want me to do?
Would you, if something like that actually came up, would you genuinely say no?
No. Listen, we are not cut out for certain things. We are good at what we do and we should do what we do. And they are good at what they do.
Right.
And with all humility, I think whoever has run our government has done the best they could in the situation they were given. You can look back and say, 50 years ago, you should have done this, 40 years ago. It's like telling your dad you should have done this 40 years ago.
Yeah.
It doesn't work. What can we do from today onwards? And the government has landed us in a good place. From the very basics, look, how does the economy make money? At one level, you either make a lot of margin, which is extractive, which is what the colonialists did. They came and extracted all our resources, shipped it back home and made money. We are never going to be a colonial power, but we haven't extracted enough of resources for ourselves, starting with, say, oil and gas and energy. And I'll talk about that in a minute. The biggest way, of course, is to do with velocity.
Okay.
That you have speed in the economy and that gives you seamless growth. And allows your entrepreneurs to run, which historically we've had a problem with because we had too many toll bridges. So when you get in things like a GST or you get in a RERA or you get an IBC, it's kind of accelerating the process and the velocity of the economy. So that's also great. You cannot have this if, for example, the poorest of the poor were not looked after. So again, outstanding job done there. If you can now say Bijli Sadak Pani is available to someone at home, even basics like toilets and all which we took for granted, or having running water in your home, which we took for granted, or having burning, fuel to light up your home or to do your cooking. So, if I see they've done things at the basic ground level, they've done things to accelerate the speed of the economy. We've done things on infrastructure, with whether it's with roads, ports, airports, telecom. So the velocity of the economy certainly is faster. And while people like to say India should grow at 10, I think the building blocks for a lot of it have been put in place. What is certainly holding us back is process reform and judicial reform, which is the harder thing to do, labor reform. So this is the soft stuff, which you do it quietly and it goes state by state. Judicial reform, of course, is a big story, and I'm very hopeful with the advent of AI, you cannot have millions of cases stuck in court where the process becomes the punishment. The biggest fundamental change will happen if we get our process reform and our judicial reform going to really accelerate the economy. But on the flip side, if you step back and think again, as we spoke in the context of history, that how do nations become great is really when the balance of payments is always in a surplus, which means they have stuff that the world wants. And if you look at India in its kind of golden age with this lovely book of William Dalrymple, which came out, where he talked of how the Indians were the largest exporters and really the superpowers of that era. And they found they were trading even up to Rome, and Roman gold was discovered in India. That era is an era which is what attracted everyone to come and invade India. India was kind of the USA of that era. Let's put it that way. Who rose after that? The great powers which then went and they exploited colonies and shipped back material which ran a balance of payment surplus. They ruled. Then it was a period briefly post-war where America ruled. Then you saw the rise of Japan, which became a large exporter. Germany, which came out of hardship, became the largest exporter till 2016-17. And why are we all scared of China today? Because today it is the largest exporting nation in the world, pretty much manufacturing half of everything the world consumes. So punching far above its weight. India, by contrast, for 75 years, the very basic premise that you cannot be standing on your own feet if you don't have energy security. From the time even I went to college, you went to college, we keep writing articles about, oh, India is very vulnerable to oil shock. We write stories about, oh, if there's no good monsoon, we may have a consumption shock. It cannot be a nation which is trying to be third largest in the world is vulnerable on such basic fronts. We even signed a nuclear deal in 2007 and there's no nuclear plants really come up then. We're doing a bit on solar, but what we're doing in 5 years, China does in 1 year. We have a lot of hydro, we have a lot of wind, we have a lot of solar, we have a lot of coal, which I don't know why we should abandon. If the West polluted the whole world, why would you be held to their standards today? So if we don't fix energy, and if you don't have energy, you will not have manufacturing. And if you don't have labor law reform, you won't have manufacturing. And with 12, 13, 14% share of GDP coming from manufacturing, you will always be importing stuff. So what they've tried to do now belatedly with the PLI is a move in the right direction. Also, to get to becoming an exporter, you must have terms of trade in your favor. Which when the WTO came out, the world had the rules tilted in the favor of the developed world. And at that time, because they wanted China in the embrace and it was the era of outsourcing and the rich guys say, why do we want to make it? Let these fellows make it. It was with a colonial mindset that it was shipped off. They let them do all the commodity type stuff. But what the Chinese have done very cleverly is they've learned that technology and then climbed on top of it and built their own, which the West may keep calling as IP theft and so on. But today China is ahead, if not, at least equal, if not ahead in most places with them. India took technology also. Like if you remember, we got scooters from abroad and cars from abroad, but we haven't really gone and built on it because we didn't have that manufacturing mindset and that outward looking mindset for reasons which we were kept inward looking with so many chains around our entrepreneurs to not get unleashed over there. So I think it's a combination of both with this renewed sense in the world that, we need to get out of China. And finally, the West may do some kind of FTAs with US and Europe probably coming on stream. The others are smaller economies. That's not really going to move the needle. But 50% of global GDP is still US and Europe. And if we can be a producer nation for them to be the consumer nation, then you start having some terms of trade changing on exports. Otherwise, what we've done, of course, is on the services side, which is that $250 billion of software and GCC exports going out. That's really what saved India. But if you look out 5 years from now with the advent of AI, the companies may pivot and become smaller and more nimble and use AI. I'm not so sure they will multiply from here on the 250 billion top line because AI will actually disrupt a lot of these business models. The other thing we did well was as processors for example, generic pharma. Even there with the advent of technology, which will come as we move from chemistry-based pharma to biotech and gene editing-based pharma. Again, a lot of the things we do well may not be that relevant, 5-7 years later. So India needs a reset. And we certainly need to think a lot harder about how we want to play this game. So both on energy, manufacturing, services, what are our competitive strengths that we can then supply to the world? And if you're on a $5 trillion plus base of GDP at that point, We have to be thinking in terms of what is $1 trillion of goods and services that India has to sell to rest of the world, on which we will remain competitive and not dependent on currency.
Yeah.
So there's a lot to be done, but let's just say, I think it's difficult when you're sitting, I guess, in the seat. Because I've been running a company and from outside looks, why can't you guys do this? Why can't you guys do that? When you sit there, you realize what you can do and in what sequence. And given our democratic setup and the way, we elect people, maybe that needs a reset also. That it's just a bit kind of, let me not put any words into that.
Fair enough. So what I'm getting from you is that as India's economic czar, your primary focus, at least initially, would be on driving exports. And
Absolutely.
inevitably, when it comes to exports, obviously we talk about currency and strength,
Right.
valuation, all of that. Do you think it is important that India strengthens the rupee over time? And assuming it is important that we do that, how do we do that?
So, Krish, think of it. Any great country which you've seen, the currency tends to be very trusted and stable. And the converse of that is that the cost of capital tends to be very low. In India, we've had absolutely the reverse. Our currency is a constantly depreciating currency, and therefore no one wants to hold the currency, including Indians. I now see some $20-30 billion of remittances outwards. Of course, the labor force is sending in, but I mean, that's a big number which is going out already from here. And to put up something over here, if your cost of capital is going to be like double digits, and the rest of the world is competing at 1-2% interest rates, you're always going to be thinking twice that, do I really want to put a manufacturing plant over here, or do I really want to build a business, take on the labor liability, and so on. So until this fundamental change occurs, which is a economic model mindset shift, we still run perfecting what the kind of West gave us. We lucked out, I feel, not by design, but because the engineers of India saved us with software and pharmaceuticals and light engineering exports from here. But unless we can give these guys a way to compete at terms which are equal to the world, with is a stronger currency, because you don't even get purchasing power in India. If you think of it, 2006, when rupee was equal 40 to the dollar, a motorcycle, say at $1,000 cost you, 40,000 rupees. Your salaries haven't gone up enough to today. The same motorcycle, because now you've added bells and whistles, anyway the rupee is closer to 90. It would have been 90,000. But now you've gone from the 110cc bike to a 125cc. You're at 120,000. So your cost of goods have gone 3x. Your salary has certainly not gone 3x. Therefore, your consumption is remaining stymied. And that's not giving you economies of scale to go out and export as well. So it's just a vicious circle in which you're trapped. The software engineer entry salary which prevailed pre-2010 is probably the same 15 years later. And the rupee has collapsed. So what's happening to your purchasing power? So unless you can become a currency which people treat with respect, and that respect doesn't come only with trade surplus or balance of payment surplus. It comes with knowing that my money is safe over here.
Yeah.
Take the example today of UK as well, that the North Sea oil has run out. They've got everyone off high street in UK. Retail is over there. Banking, they've made all the non-doms now run off. The UK currency is still holding. Why is it holding? Because you think, there's rule of law and my money is safe over here. It won't go anywhere. They run the larger trade deficit than India. If you look at their fisc and their BOP, it looks like a third world country, but the currency is holding. Because people are happy to trade and transact in pound sterling. So India has made again the very baby steps of having our currency traded in different markets, from UAE to Singapore to even to France, for example. But unless people get confidence that this government and the central bank over here is behind a stable currency, and stable doesn't mean 3% depreciation a year is not stable. It means that, for 25 years, the pound sterling, the euro, and the dollar have traded within a very narrow band. Can you aspire to being in that club, that even when, say, the yuan got pretty much pegged to the dollar, the yuan hasn't moved against the dollar in the last 20 years. It's giving people confidence that I can hold a yuan bond, which the Saudis, for example, are lining up to buy. Why can't we aspire to do things like that? So all this, I say, is really a model reset in our heads first. Then the world follows, because it's a bit like when you go out and raise capital for your company. A startup may not make profit for 5 years, and yet it has a multiple, because people are either putting a metric or multiple on sale or where will the landing point of this company be when it eventually makes that profit? I think time has come for India to take that position, because if you look out for the next 20 years, which is the large economy, which is going to be double, triple, quadruple its size, none of the G7 are going to make it. China is slowed down materially. Other than that, there's only India. Then you have all the Indonesia, Brazil, and all the other economies following you. So we have to take a little more proactive stance towards developing an economic framework which is of our choice and suits us, like the West designed rules of the games, in 1945 or whatever.
Yeah.
So time has come for some changes to happen.
Did you think you'd ever live to see the day where the rating agencies downgraded America?
Maybe the guy lost his job. But look, US has lived far beyond its means, and which is why President Trump, I think, was rightly advised by everyone that you cannot live with this kind of balance of payments. You cannot live with this kind of fiscal deficit forever. And there are enough commentators who are knowledgeable in the US who pointed this out, plus unfunded liabilities which they have off balance sheet for their Social Security and Medicare is totally off the charts. So if you were to take a bet 20 years from now, will the living standards of the average American be better or worse? I think it's a no-brainer, it's going to be worse. If you exclude why there's so much breakout in the voting patterns, because if you leave the two coasts of US, middle America has not had standard of living improvement already for the last 40 years, which is a startling thing to say for an economy which is at $80,000 per capita. Most people are not happy, and which is why you find such stark political division. It's only going to accelerate. You're seeing the same thing play out in Europe for the same reason. And all these economic changes eventually lead to political changes. Because we say political leaders, but actually these leaders are followers of trends. And then someone rises in response to a certain trend. And I think that's inevitable what's happening over there. It's also, in a way, our destiny that we should do better. But just sitting back and relying on your destiny and not doing anything about it makes you what happened to Argentina 150 years ago. So things are aligning in our favor, but it's your generation which is going to make us great.
But do you think that Indians, I'm saying it's a sweeping statement, but do you think generally we overestimate our place in the world today?
Yeah.
Do you think if you were sitting in America, you wouldn't really care about it?
I mean, we think as if like our stock market is going up and the whole world's holding its breath. Look, at 4 trillion, you're like 3% of global market cap. You're a micro cap in the context of, like you said, for a US fund manager. But again, the US guy would have some notion of, I wanted to invest internationally. He would have gone to UK, France, a bit in Germany, Japan, because it at that time was a big deal. They all went for a while to China and then they blew up. So international investing by and large is not on the radar of the Americans, by and large. Because if you're 75% of global market cap, like even Mr. Buffett, he made a couple of investments in China, one in Israel, and then the much storied bets on the trading houses in Japan.
Right.
But by and large, his money has all been in US, and the world's best investor could get away doing that. So I don't think he even bothered to ever look at anything in India, despite Ajit Jain being the vice chairman there. So that tells you a lot. So we do overestimate. But if you project out, 15, 20 years, will India become an asset class in its own right? It is already getting there. But by all means, if you don't have an India view, in most global boardrooms, especially in the West, I don't think the Chinese really care so much. But in most of the developed world, if you don't have an India strategy or India view, maybe from a consumer point of view, if not a manufacturing point of view, you are doing yourself a disservice. So it will be center stage. The second flip on that is, most of these large countries, when they grew, remember the early stages, it was the Americans or the Europeans who went and set up fund management entities there. But eventually the locals win. So if you go to France, for example, it's the French asset management companies which are the biggest, not the Americans or the British or whatever. Similarly in Germany, China, and so on. And it's silently happened even in India, that the largest 5 companies, with the exception of Nippon, are all Indian-run entities. And that also then holds back. Because if you're Morgan Stanley with a big business in India, you say, hey, let's put some more in India. Whereas now you're waiting for someone to allocate money to an international or an emerging market fund to come here. So it'll happen, but it's slower than I think we're imagining.
Yeah, that classic line, right? The India disappoints the optimist and the pessimist.
And the pessimist.
Yeah.
Ruchir Sharma's famous.
Exactly. And this, I mean, we touched upon in our conversation this idea that it's a very young population, and that's in many ways our biggest strategic advantage. But in an AI world and technology rapidly advancing world, do you think that is potentially a banana peel in the sense that you may have
There is.
a lot of unemployed 30-year-olds?
No, it's true that a lot of it's like when the industrial age came, the artisans all got out of work because the machines took over. Similarly, when, say, the internet came, a lot of people who are relying on this arbitrage between countries, they got flattened. And we, in that sense, became a big beneficiary that we could become the back office for the world. So same way in AI, while it'll be a threat to the traditional sort of coders and so on, it's throwing up opportunities for, say, even people like yourselves. You think without internet, without 5G, you would be doing what you're doing today? This business, as it were, didn't exist 5 or 10 years ago.
Yeah.
So when AI comes, the people who can use that AI to become better, faster, cheaper, or whatever, it's a material change in that. And it's always the agile person wins. It's the history of nations and history of mankind is the smarter person eventually wins, which is why you want to keep reading, keep staying abreast of trends, and keep having the guts to take risk. Because if we keep sitting and crying about, oh, this is what I used to live with and this is the way we used to be, you're not going to make progress. So all these are mindsets and attitudes, which is why we are here. And also, I mean, at one level, we may have in the last 75 years only been thinking about capitalism and making more and more money and more GDP. Maybe there is a reset also in everyone's mind that if you have everything you need, for example, your generation came with their kind of stomachs full. When we guys were growing up, we had to go out and fight, and go out and do any business to at least get to the basic level of what I call Western level of standard of living for the most of urban India. Your generation has come with your stomach full thinking, how can I go and now conquer the world? How can I make impact on the world? That's a different mindset to then live with. And hopefully we're living through that period where you guys both have ability to take risk and understanding to take risk and the aspiration to go and do something which hopefully can make the world a better place.
If you were 25 today, I mean, based on everything that you said, would you say it makes more sense to be operating a business rather than an investor?
Absolutely. You're seeing what the market's paying you for being an entrepreneur.
Yeah.
The investor's paying a very high price for something which is coming pre-discovered. Even at a startup level, there are 15 funds lining up to give you money, $6 million for just pitching an idea to one of the most storied funds. They start off at 6 million and then we'll see where it goes.
But don't you think that was just sign of the times and that's long term that can't happen?
No, there is a lot of money in the world. There are fewer entrepreneurs than there are investors. Let's put it that way.
I suppose.
And the balance of power is with the entrepreneur today, and rightly so. They are the ones who are putting blood, sweat, and tears behind creating something.
Yeah.
And if you again think of the world, people may not appreciate me drawing this parallel, but we are all formed like a version of God. If God is the creator, we are all coming here to try and create. So you may create your own universe when you make your own family, or you create your own universe when you're building your own business, or you may be an angel of mercy if you're a doctor or someone who's doing good in that sense without creating an entity.
Yeah.
So if that creation is what we are leading towards, and we're heading to a singularity where you get all this energy, which is kind of endless, you get sensors which are endless, it's basically recreating whatever we are formed by, right? You got VR to take care of your vision, you have sensors to take care of your touch. So you see where this is taking you.
Yeah.
And if you get to that stage and you have, then I don't need to go out and earn my daily bread in a way. And your needs are fulfilled. So you're like an abundant soul. What is the search for what you want to do then? Is it more money, or what is the purpose for which I'm here? And what can I create? And will the world then become a lot more artistic, a lot more peaceful? I don't know. So it may be a different paradigm. If I come back 30, 40 years later, I don't think it's like the world pre-1945 was a very colonial imperialistic era. If I met my dad, he kind of took it for granted that the white guy and the slaves is a normal thing in the world. If we look back, we say it's stupid. How can this have been the case? Women didn't have voting rights in even the West 100 years ago.
Yeah.
You died in childbirth. Half the women died in childbirth, like it was 120 years ago.
Yeah.
So what has changed in the last 100 years is incredible. And already, if you were living in the 18th century, you would think what we are living through right now is like godlike. You're able to converse to someone who's like halfway across the world on a video call.
Yeah.
All right, this is what you would think this is science fiction, what's going on over here.
Yeah.
So what will come in the next 20, 30 years, it will make today's science fiction look like very mundane. And it's exciting times, therefore, to be part of this building process and not just an investor in this process. If I were 25, I would be on the other side of the camp.
Yeah. Right, interesting. And what do you, again, as India's economic czar, what do you think is the best way to unleash that entrepreneurial drive?
Look, it's again, let me put it in a different way. If your religion is very prescriptive, it will not evolve, right? Why has the Indian civilization weathered so many storms for thousands of years? Because it was very all-inclusive and it got out of the way. You want to find your way, do it in your way. The way the Indian state is run is very prescriptive, right? In a lot of our boards, we talk of having first world compliances with third world infrastructure or processes. The system is something which is holding us back because the system still fundamentally is coming from the British era of command and control. That the citizen is wrong. So, for example, you would pay your advance tax before you made the income. And if you get it wrong and your calculation is wrong at the year end, you pay an interest which is not deductible. Now, this is a anti-citizen state of being. It's right for the officer. He has to do what the rules are. But why is it designed in this manner? Today, the citizen, if they commit a crime, it's everything tilted against the citizen because now you have to endure the whole court process and it may take 10, 15, 20 years. You'll eventually come out innocent. But for you, the process is the punishment.
Right.
So average person, when he sees a cop or he sees an officer, he's like, I don't want to get into this, settle it and move forward. You cannot run an economy and an enterprise in that environment, which is not designed to helping you to actually run faster. When we go out and we see businesses out, you'll have a canton head in Switzerland coming and sitting with you, or you'll have a guy in UAE coming and sitting with you. What can I do to help you to grow your business? Because his targets are not on what he extracts from you. His targets are on what GDP I've created for my area or what employment have I created for my area. Whereas here the targets are how much tax could I exploit and bring out of Krish. So again, it's a governance shift, which is a mindset shift again, which we need. Because if you think of it, when Indians go outside, how is it we can run the best companies in Silicon Valley and we can't do it here? They came out of the same universities here. There's something in the environment which we created, which made the guy go there and do it and he couldn't do it here. And that environment I'm saying is this command and control. While Prime Minister talks of being Pradhan Sevak, his attitude and where he's pointing is absolutely right. But it's not translated down across the layers because for most officers, it's still about you must be doing something wrong. The starting premise is not how can I help Krish make this podcast a global podcast. It's like, how did you get advertising from abroad and have you paid tax on it? I mean, it's a different slant which comes in.
Right.
And again, not to complain, this is how we've come and this is how we evolve and things will improve. And as an investor, one is always optimistic. But since you're asking as a young person, if you see these changes, then whatever multiples you pay for India are never going to be enough. In the situation we are in today, we've paid a lot for our coming years already.
And I just want to bring the conversation back a little more to investing. So let's imagine I don't have anything. I have a complete clean slate. How should I think about the market over the next 2-3 years?
See, next 2-3 years is tough because markets have cycles, like economic cycles. And markets usually, I learned this when I was very young. I learned from the great Mark Faber. He talked of economic cycles where he calls a phase zero, where everyone is given up in life. And even though they have thrown money at the problem, they're giving you cheap interest rates, nobody's interested because you're so burnt by the last cycle. And you're too young to remember like the early 2000s when US after 9/11 and the bust of the TMT, whatever you did, nobody was interested. Then typically you get some catalyst where, for example, in India, it became Vajpayee government came and said we can privatize. and it creates a kind of animal spirit in you. Or an important commodity price like steel prices, zinc prices all just started taking off. That creates an animal spirit. But people are still so dismissive that we've seen this before, it doesn't work. So few stocks go up, few sectors go up, and smart money is already in because they're seeing that the trend has changed. From there, you may get the correction because everyone who was trapped in the last round, like last chance, let me get out of this. You get that first phase of correction, which he calls phase 1. But then phase 2 is when really the boom spreads. And those guys, they buy more from their suppliers. People get a little more confidence and earning growth accelerates like crazy. Again, correction because like you said, last year, this is run up too much, let's correct. And then phase 3 is the blowout when multiples expand and go crazy. Like this time is different. We are the rulers of the world. Like we became in that era BRICS. That this is the next G7 and the old G7 is dead. And we prematurely, think AI is already here and it's going to take over the world. Or in the 2000 period, it was internet is already here, it'll take over the world. The world moves a lot slower than you think. So markets discount, but your markets have priced it, but the world comes 10 years later. So in the phase we are in today, we are already in that P multiple being absolutely crazy. And where this ends is in retail euphoria, where, for example, 2008 were very large IPOs, which then opened and then, tanked and retail lost money. Or someone makes a very stupid acquisition. And you know that now, for example, at that time, I remember it was Tata Steel bought companies abroad. Tata Motors bought companies abroad. Hindalco bought their company abroad. And it took years for the paybacks in some of those companies to come. The companies, of course, have wherewithal and they come back and 10 years later, they look stronger for it. But at that time, it's like you've paid a lot too much for it. And from that top, you get an unexpected shock that some leader will get in trouble. The market just sells off. And then it's indiscriminate in selling because towards the end, it's been the indiscriminate buyer who's pushed the prices up. So in that voting machine, it goes down to what you call the period where you have to stand with a weighing scale and buy by the kilo. Like we say, you then can buy in acres what you're selling in square feet up there. So we are in that period of, I think, euphoric times that India has a great 20 years ahead. We are not really pricing in the risks. We are paying a lot for the future today because I see like even defense stocks as an example. Like they sell at 10, 12, 13 time multiple on sales. Forget about, we used to buy them on multiple of earnings. A lot of these new age companies which have come, they are good companies. There will be much bigger, better companies 10 years later. But if you've paid a price for it today, which is very hard to justify even over the next 5 years, you're not acting like an investor. You're really playing a momentum trade over here. So we're in that period of the markets. I'll be a bit cautious on the markets. Having said that, as a young Indian, if you are not investing in a business, you will destroy capital because inflation and what we do with our currency is going to erode your purchasing power. And the good news of India is there's enough array of companies around where there could be a bull market in some sector, but there could be a bear market somewhere else. And it's useful to look. But I do think you'll get better buying times in India in the 2-3 year time frame which you're talking about.
Do you think the bond markets today are acting as a proverbial canary in the coal mine and we should be more looking at
overseas? Yes. Bond and the crisis is going to come from currencies globally. You saw, for example, the Taiwanese dollar went up 20% in a matter of a week. So it's telling you that there are resets coming in currencies. The Swiss franc is up 20% against the dollar. No one's noticed and looks headed higher based on what's going on in the US. So there are resets happening in the world, which I don't think people have woken up to.
And so, I mean, because you mentioned it right now, I want to talk about the idea of international investing and just investing in different markets, not being focused on one. How do you think about that? What's the best way, in your opinion, to do that?
So, well, in India, of course, we are constrained with how much capital you can put out through your LRS and so on. But having said that, it's like when you did spend money to go and get educated abroad, right? But your education didn't end there at undergrad. Same way, if we are clear that this country is going to be third largest economy in the world, you cannot be sitting like a frog in the well, looking only at your market. Because there are things which are happening in the world which are going to affect you. For example, if you didn't know about AI, you think Indian software services is like easiest way to make money, right? If you did not know about EV, you would think Maruti Suzuki is going to rule forever. If you did not know about biotech, you would like Sun Pharma will rule forever. But if all these changes are coming, it's coming because you're abreast of what's happening in the rest of the world.
Yeah.
Same way, if you don't know what companies are doing over there and how they may possibly either collaborate or compete with our companies, you're doing yourself a disservice. So if sit back and think, is it conceivable in 5 years that India still has a capital constraint, remittance scheme? If you truly are the third largest economy in the world, how can your currency not be freely tradable? If your currency is freely tradable, will Krish Kothari wake up in 2030 and say, hey, now I need to learn about international investing? Or do you already need to do it? So the time to prepare is now. So while you made money in the Indian market, please even use whatever 100, 200, whatever you can put out to at least start learning the ropes of what is going on in the world. There are very interesting opportunities in the world. In fact, because there's fear, like you said about Europe or Japan we spoke about, when there's fear, there's also opportunity. So you may get value picks which may help you to make some money there. The incredible breadth of technologies emerging is not only in the US. You'll find it in Asia, you'll find it in Korea, you'll find it in China, you'll find it in ASEAN regions. So all I'm saying is don't be a frog in the well. Look at what is happening in the world. Maybe as an operator, you can bring that over here and build something and then go out and conquer the world. Or as an investor, you can profit from it, make money in someone else's stock and then use it to build your own business. Possible. The missing link in India, which Sharad Sharma at iSpirit says very well, he says historically, where does the value capture right in a value chain? The person who makes the protocol, who sits at the base of the stack, like we made the India stack. And if you didn't have Aadhaar and that whole UPI stack then which we built on top of it, that could have been controlled by, the erstwhile Visa, MasterCard or the Amazons or the Googles. But if you own that kernel and the underlying technology, then you build the applications on top of it, which is now a Google Pay or UPI or whatever. But the underlying stack had to be yours. That's where you could capture the biggest value. On that, you will then build, products or services. And historically, India has only played at that layer where we were building to somebody else's spec. Therefore, you were the commodity guy making a very finite margin and a very finite return on capital. Whereas you think of in a financial stack, who was making the most money in the world? It's not HDFC Bank, it's Visa and MasterCard. Right? Same way in technology, it's not Indigo, or British Airways. It was Boeing and Airbus which was making all the money. Of course, they're badly run, they blew themselves up. But the value capture was all there. Similarly, it's like one Pfizer took out one COVID drug and they made $40 billion on it. That aggregate Indian pharma industry cannot make that. So if you don't own the underlying IP, underlying brand, underlying product, which is where we guys should be heading in the next 5, 10, 15 years, you're doing yourself a disservice. And there are some places we have natural advantages. Like you can conceive of, say, an Ayurveda company from India going out. It's not something the West has a natural right to win. You can have, say, a Sabyasachi from India going out with our kind of couture, which will not be natural for the French or the Italians to build, for example. So I'm not saying these are the ones who'll do it. But illustratively, we don't need to ape what the West has done and won. We need to find our own ways to win. Like, for example, our hospitality business. You try going and living in a hotel in Europe and see what service you get. And then you come and you see what kind of fantastic services you get over here. So a lot of places where we have a right to win, but then our aspiration and the way we play it and the way we can scale it and manage it will determine who wins it.
I always think of even today, IT companies will announce or tie up with Salesforce, and it's still, for them, it's still a big thing.
It's like a badge of honor. It should not, why can't we, like in this war, if we didn't have our own Akash team and only depending, suppose Russia S-400 had not been allowed, were we just sitting there and say, yeah, please come and slap us? It's because we invested in these technologies. And if see defense, automobile, engineering, IT, if you don't have a core base of this, your security of your country is going to be at risk. You will never be a manufacturing power. You will never be an exporting power. So they are interlinked. So what the Prime Minister did set out with this Make in India on defense, electronics, is all the right moves. And it takes decades to play out. Like the US owes a lot of what it built to the DARPA program which they had over there. And a lot of the technology which came out from that kind of structure. We need this university ecosystem to develop. We're still running away to kind of study in the West and come back. I'm very encouraged by what the universities in India which are now coming up, will be creating. And we'll be the Ivy League 20 years, 25 years from now. And you have to learn to think in terms of making those kinds of investments. especially as the country gets larger and larger. Because now the competition, remember, is only US and China. But the rest are all going to be in the rearview mirror very soon.
And especially as Trump doesn't allow us in anymore. So
Look, every guy who wants to be the top doesn't want someone to come up and threaten him. So if you were number one, you would not want number two to come up. So that's normal human behavior.
right.
I don't think you can blame the Americans or the Chinese for behaving like that. The British, did a lot of horrible things to us for hundreds of years, and we're still so friendly to them.
Yeah.
Because, like they say, wo daur aur tha, ye daur aur hai. This too shall, hopefully we rise and we become a more benign power whenever our rise happens.
In recent times, are there entrepreneurs or companies that have particularly caught your eye either in India or abroad?
So let me first frame it in a way I've done this in the past, where I call it the golden period of any entrepreneur tends to be in the age when they are 40 to 50. And the reason I say it is in the 30s, you tend to be, and again, I'm generalizing, that you may be a little more immature, a little rash, especially in allocation and handling people and so on. And as you get to 50s and later, I mean, really the 60s, although nowadays people are fitter and more energetic and so on. But you're like worldly wise, but little low on energy and like, abhi kya karna hai yaar wapas. So that golden period of 40 to 50 is when really the companies really accelerate and take off. And if you look back, say from the 1990s, which were the biggest wealth creators in the 90s? Of course, the software guys. So all the Infosys, Wipros, all of them, Mr. Murthy, Nandan, Azim Premji, all were in that age group. HDFC, Deepak Parekh, that age group. Then you turn from 2000 to 2010, who comes into the right age bracket? Mukesh Ambani, Ajay Piramal, Vivek Chand Sehgal. Enormous wealth creation happens in that period. Anil Agarwal, all of them come in that. You go 2010 to 2020, actually Chandra was not yet 50. Look what he did with TCS, which came at the fag end of really the whole IT cycle in a way, and just completely surprised everyone. Rajiv Bajaj, Sanjeev Bajaj, the story of last decade was, of course, Bajaj Finance, so on. So many names like that. This decade, when you look out again, you like last decade, we also thought Jay Shroff and others like that would create something fantastic, which they did. This decade, there are names already. Some of them have done very well. Like say Zomato, Dipinder is in the right age group. Karan Bhagat, who built 361, for example, right age group. So it's not the only lens, but I'm saying it's an additional lens to say that it's like Virat Kohli in the prime of his career is the place you want to be.
Correct.
So while he'll be a great player throughout, there'll be ebbs and flows during the career, but this is the sweet spot you want to be in. So those are the sorts of people one would look at. The second, of course, is, like I said, there are economic cycles and then there are market cycles. And people sometimes land up in the right place at the right time. And that, for example, on tech, what surprised me is honestly not the US. What surprised me is China. The amount of advances made, for example, they doubled down in the first Trump administration when they realized they can be cut out. And what they created in the last 10 years, the markets have not done well, but the companies that they built have just been incredible. Like in the early 2000s, we used to be dismissive of China that they will build hardware and we are the software kings. But what they created as the Alibabas and the Tencents and so on became $500 billion gorillas over there. They've overturned the whole global auto industry. If you buy a car now, it should be a Chinese EV. They're just far ahead of anyone else. Battery technology, solar, robotics, even on biotech, I won't be surprised because their FDA is no longer as bureaucratic as the US. I'm waiting to see what the hell they come out with, because they already have Chinese kids coming out with blue eyes and blonde hair and so on, for example. So, I mean, that's on a more sort of funny note. But I think advances coming out on tech from China is surprising to me from the world. Even tiny Korea, what they created as a large global auto industry coming on the tail of the Japanese has been surprising. So while US, of course, we are all enamored by the great, magnificent 7 companies, but the story is already shifting.
What do you think is the most important advice you can give to somebody who's trying to build a career in whichever field that may be? What is your sort of one point advice you would give them?
I tell my son, he's similar age, well, a bit younger than you, but that if you know yourself, then you play according to your strengths and just keep investing in yourself to keep grow your body of knowledge and what you call the karmic cycle of being a better human being, because you'll attract better vibrations. So if you're a giving person living in gratitude and becoming better and better and better each day, that's what you can do. And that's what will keep you ahead and alive and happy and optimistic in this world. So that's my wish for you as well.
Thank you so much. And Manish, thank you so much for coming on. Thank you for taking the time. It was absolutely wonderful having you on the
Thanks
show.
for having me.
Thank you.